This will be the halving, but it will be the most important halving in Bitcoin history because it's the same as someone promising to buy $8.5 billion worth of Bitcoin every year for the next 4 years. That's the effect on demand, right? At the present price, it costs $8.59 billion or $23 million a day. In the past year, demand through ETFs has jumped by 4 to 10 times the daily supply. That's a huge amount, but what's more important is that it's a huge shift in the supply and demand. Michael Saylor, the founder and executive chairman of MicroStrategy, thinks that 2024 will be a big year for Bitcoin, especially in the 4th month of the year when the much anticipated halving event will happen. A well-known businessman and big Bitcoin bull named Saylor says that we are about to see the most important halving since the first Bitcoin was created more than 15 years ago. There have been 3 Bitcoin halvings so far. Each one cut in half the block reward, which decreased the amount of Bitcoin in circulation. All 3 had a big effect on the price, but the 2024 halving will be different because the US Securities and Exchange Commission approved a number of spot Bitcoin ETFs in January. When Bitcoin supply was cut in half before, people only thought that it would become more scarce and valuable as a result. And it did it 3 times, not just once or twice. But since Bitcoin ETFs came out in 2024, the story has grown even bigger. Thousands of institutional investors across the US have bought Bitcoin or plan to buy it through these ETFs. This has made the demand for the most popular digital asset many times higher than the daily supply. In just a few weeks, the supply will be cut in half again, creating a huge and unprecedented imbalance between supply and demand for Bitcoin. Saylor talks about his thoughts on Bitcoin in 2024 and beyond in his most recent interview with Crypto Nutshell. He also talks about what will happen to Bitcoin after it is split in half in April. The famous business executive and billionaire investor says that we only have a short time to buy Bitcoin cheaply before its price goes through the roof and many people can't afford it. Now we'll show you parts of the interview, but first please like this video, subscribe to the channel and turn on post notifications to get more videos like this. For the channel's growth, everything you do is very helpful for the YouTube algorithm. Thanks and have fun with the video. I'm not surprised that they're doing well. I thought they would do really well. I think demand has been building up for 10 years. In Wall Street, they're the most anticipated new thing. This is the same as Bitcoin going public. Because Bitcoin is a commodity, it's like 10 companies going public at the same time. It's like the IPO of Bitcoin. It's not a safety, it's a big deal that BlackRock, Fidelity, Grayscale, Bitwise, and ARK are all putting Bitcoin on the market at the same time. It's not a surprise that they're doing well as ETFs since Bitcoin is the best ETF. Aside from oil, the other ETFs are based on commodities like gold, silver, palladium, natural gas, market baskets of commodities, and oil. The problem with all of these things as investments is that physical goods aren't scarce. It is possible to make any amount of physical goods with more money and knowledge. In the end, the gold ETF is the best of them all. However, if a lot of money flows into a commodity ETF, it just sends more money to companies that make commodities. They just sell that item on the market, the cost stays the same. That's why commodity ETFs were never a good idea. Compare these Bitcoin ETFs to the SP index, the Spider SPY, which launched in 1993 and was based on the idea that you could make an ETF that represented a market basket of 500 stocks, was the first and maybe the most important ETF on Wall Street. That was big, and it was even bigger because it happened at a time when people had lost faith in currency as money and a way to save. The SP became money, and that ETF became the index of money. That's why, that's the most successful ETF right now. SPY and all the other ETFs that track the SP 500 and most of the capital in them. But those ETFs aren't good because stocks aren't conservative either. Which means that if I raise the stock price by 10 times, you'll get more equity. To put it another way, if I give an ETF like the SP ETF hundreds of billions of dollars in cash, it has to buy all 500 stocks proportionally. That means they have to pay whatever it takes to buy Tesla, Apple, Google, and Meta. Their price doesn't change if they're paying too much. In other words, when they buy it at any price, they're making more equity because they're getting companies to give out more stock. After that, this makes sense, of course. If the price of your stock doubles, employees in the company that gives them stock options should sell them, right? They offer to sell stock. You sell more stock when they sell the stock option. That is, the price makes the supply. There's an elasticity of supply and price there. That's the same thing you have with goods. It's the same as with real estate investment trust REITs. Bond funds are the same way. As money flows into those other types of assets, more of those assets become available. They're not hard to find. Because Bitcoin is one of a kind, putting money into a Bitcoin ETF will not make any more Bitcoin. We have 900 Bitcoin every day. We'll reach 450 Bitcoin a day between April 16th and April 18th of this year. Half of the Bitcoin supply will be cut in half. This will be the most important half cut in Bitcoin history. The most recent information on BlackRock's website shows that as of February 23, 2024, the world's largest asset manager had raised more than 130,000 Bitcoin for its eShares Bitcoin Trust IBIT. There are now at least 130,231.2 9980 Bitcoin in BlackRock's Bitcoin ETF. These coins are worth $6.64 billion on the market. About 109,609 Bitcoin were held by EBIT as of February 14th. This means that BlackRock has bought more than 20,000 Bitcoin in 9 days and doesn't plan to stop anytime soon. BitMEX research shows that BlackRock and other spot Bitcoin ETFs brought in more than $232 million on February 23rd. IBIT brought in the most money with a net of $167.5 million. The next two were Fidelity with $52.5 million and ARK Invest with $34.5 million. Only $44.2 million was taken out of Grayscale's GBTC on Friday, which was the least since the coin's launch. Even though GBTC lost $7.4 billion, all 10 spot Bitcoin ETFs have now seen net inflows of more than $5.5 billion. Saylor thinks that the huge demand for Bitcoin will last for many years to come. The ex-CEO of MicroStrategy talks more about his predictions for Bitcoin in 24 and the next era for the most popular cryptocurrency, which he says will last until 2034. Here are some more interview clips. I think Bitcoin will do well this year. The approval of the ETF at the beginning of the year was a big step forward. The fact that ETFs have done well is another important step forward. The halving in April will be the third good thing that happens. I believe these three things will keep things moving forward, and I believe the marketing wars between Wall Street firms will be good. I believe that the asset is becoming more common among regular investors, and I believe it will continue to gain steam from here on out. I also think it's important to make one point. I believe that we are now living in the Bitcoin gold rush era, which I believe began in January 2024 and will end around November 2034. I'll tell you why. It's been about 10 years. To begin with, about 93.5% of the Bitcoin had already been mined. By November 2034, however, 99% of all the Bitcoin that will ever be issued will have been given out. That halving is a very important sign. People talk about new Bitcoins coming out every year for the next 100 years until 2140.